Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Monday, December the 11th. The year's 2023. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And just a reminder about risk management. Never lose more than you're willing to lose on any one single trade. So, we gapped down almost on every pair but one, and all the gaps have filled. We are 50 pips above the open, 18 off the high, and 50 off the low. So we've got no bottom wick so far. If we zoom out to the monthly, we are 51 pips below the monthly open, 153 off the high, 69 off the low, and we're still inside the previous month's candle body. And we're still inside the previous week's candle body. And we're putting in the opening range for the day right now. And we are in the previous day's candle body too. So across the board. For the year, 482 pips above the open, 571 off the high, and 769 off the low. We broke out of the weekly inside bar from 15 weeks ago. And we've got a lot of inside bar action here today. 68 pips range at the moment. It looks like the yen pairs are leading the pack in range once again. Well, remember when I noticed that the dollar yen was over 150 and over 151? Anybody short that? Sure would have been a nice trade to hold on to. Okay, buy zone. We haven't dropped below the weekly open, so everything's just been green. You can see though, now we're coming back. Red rats are starting to feast. The range is large enough. It looks like we almost hit the weekly pivot but failed. Bambino Flex indicator says look for longs. Near the pivot point, we're supposed to be short. Looks like that happened the first time, but then we moved right through it. We got close to R1, and the bias was short, and that's paid off. So once again, we almost hit that weekly pivot. So you can see we took out the daily. Just missed the weekly by probably less than a pip. Yeah, by 6 points. And as far as the monthly goes, we haven't taken out the monthly yet. Low of the month is 125.017. So looks like we missed that by about 17, 18 pips. Yeah, 18 is right there. Sometimes I forget and just calculate stuff in my head when I've got it right on the gauge. We haven't hit the H4 pivot. This is supposed to the one for this candle, so that could be in play for today. It looks like we touched that upper wick zone and then just turned right around. So notice in and out, back in and out of the lower wick zone. And once again, price doesn't like staying in the wick zone. And taking a look at the ranges, only 68 pips so far today, so it doesn't even move the needle on the smart range gauge here. We haven't broken out of the high or the low of the previous week. High minus close 24, close minus low 46. But once again, the green rats haven't had a chance to feast yet because it's just started at the bottom and moved up. So when the day first starts, the rat zone is closed. It has to, remember, you're looking for a retracement, so it doesn't work. But weekly open crossover, like I said from the beginning, it's just been straight up, back 68 pips, and there's been no movement to the downside. Taking a look here at simple price action trading the psychological levels. You can see action around the 75. You can see how once it gets near these psychological levels, you can see pretty much how we have a bunch of action both ways till it decides which way to go. But once it hits the 50, it's either going to the 75 or the 25. And you can see we broke out of the previous hour's low, came down, went back, broke it, went back, broke it again. And you can see possibly push back down to the 50. And looking here, look at the 30-minute chart, you can see still, once again, right around the 50, you start to get that ranging. Lowest high, highest low, you see we just put in a lower high right there. The highest low, that trade paid off, came back up and paid off a second time. And 222 pip range so far in the month of December. We haven't pushed the range expansion. Okay, trade reminders. Let's see, we're looking at the monthly right now. And prices between the wick zones here. We mentioned that earlier. Fade to pivot sell, 24.83. Lower high, higher low, so inside bar. Weekly price between the wick zones. Fade to pivot for a buy. So we already did hit that pivot. Lower high, higher low, inside bar. And then we drop down to the daily. Price between the wick zones. Buyers looks like in strong control, even though everything below H4 is red at the moment. The close crossed above the previous mid and crossed above the pivot. So let's see, there was something I wanted to mention to the traders. I have to remember what it was. I think we were talking about change last week. I remember I saw something that was kind of interesting. But I can't remember what that is. But as soon as I said the word interesting, I remembered something else. You know, we trade to make money. You know, that's pretty much the end goal. But if we focus on money, we're focusing on the result as opposed to focusing on what we're supposed to do, which is our plan or the process. And what happens is when we focus on the money, we start to second guess every trade. We second guess our entries, we second guess our exits, and then we start to do Monday morning quarterbacking. And that's just not the way to do it. And when we're talking about trading, we're talking about something that is a risky endeavor. And because the risk is in the fact you don't know what the outcome is. So, for example, I just mentioned earlier this lower high trade. And you can see you had several opportunities to get in that trade. And now it'd be worth about 4 pips. But what could have happened is, let's just say you said, okay, we got a turn trade set up. What's a turn trade? Well, when it makes a relative low. So anytime there's a semaphore down here, that's pretty much indicating a relative low. So you see you have a turn trade. So you go, okay, we let this candle close, We'll take the long here. And then you see it immediately dropped against you by about a pip. And what would that do to you psychologically? What would that do to your emotions? Would it start to throw you into tilt? Oh, shoot, this thing doesn't work. You start to get emotional over the trade. And then, though, it came back up. It's like, do you take your pip? Well, was that your plan? Or are you reacting emotionally? Then what happens? You don't take your pip, it comes back down. Now, are you kicking yourself? Or did you take your pip and re-enter? And then it goes up, hits the 70 line. What do? 72, 73, 74. You can see how it's moving up. It's be worth 10 pips. What do? You see a 3 ball. Do you get out? I mean, these are things you have to almost decide ahead of time. You see it broke here, it broke here. So what do? What's your plan tell you to do? Whatever your plan tells you to do, that's what you need to do. That's what you need to do. And if you don't have a plan, which, most people have plans for entry, not so much for exits. So if you don't have a plan for exit, work on your exit plan, your exit playbook. You don't have to use my exit playbook if you don't want to, or that my format for it, or my indicator for it. But you need to have an exit strategy just like you have one for entry. Because, fellow traders, it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is the Rumpled One, over and out.